Well, Stefan Leins, professor at the Institute of Social Anthropology at the University of Bern in Switzerland. Welcome to the Deeponomics podcast.
Thank you so much. Thanks for having me, and congratulations to the show.
Thank you very much. So I read your phenomenal book, Stories of Capitalism, which is based on a 2-year ethnography inside a Swiss bank, which is also the pseudonym you use for referring to the bank, Swiss bank, where you take part in the daily work of financial analysts. Why did you decide to conduct this study? And how did you achieve trust to be able to get this access?
Yes, it's actually a longer story probably than expected, because my initial idea was not to work on financial analysts. As a matter of fact, I wasn't very much interested in financial analysts first. I had different plans for my PhD. I wanted to work on Islamic finance, Sharia compliant finance, and I did interviews. I started to do interviews, but I didn't really get access to banks at that moment in time. So I was looking to get access to banks, because I was so much inspired by the ethnographies that came out around that time, and I wanted to do something like that. I really wanted to be there with the people, to study them on an everyday basis. So I looked for access, and I got in touch with a Swiss bank who would then at the end give me, after some convincing that I had to convince them of my project, but then they would grant me access. And once I got access, I wasn't sure where are you going to place me? And they say, yeah, you can work with the financial analyst. They kind of do something like you people do in research, so that could be a good fit. Yes, that's how I got to the financial analyst department.
Okay. So it was based on access then. You could have been put in any department, I guess, in a sense.
Yes, and it was really not my. Also, like, even when talking to the bank, I wanted to go to see and to study client advisors, not analysts. So I had different ideas, but as it is in ethnography, it is many times the case. You know, you just have to go where it takes you and see what then like happens interesting around you. And this is really what I ended up doing.
Yeah. For the potential listeners who are not so familiar with anthropology or ethnography, can you just briefly explain those two?
Yes, absolutely. So anthropology is basically just a discipline where we study people in a cultural or a social context. So it has a lot of similarities also to sociology, with the big differentiation that I would say many sociologists start with an idea of society and then go work their way towards single individuals, and we start in the opposite way. We start with the persons, with the subjects, and then come up with cultural, or study cultural and social or cultural practices in social fields. It is very empirically driven, and this is why when ethnography comes in, so really like the long-term field study of persons in a particular field. This is really kind of the DNA of the discipline right now.
Right. Okay. And since you said that you didn't know you were going to study financial analysts, I guess the things you found, obviously, which you talk about throughout your book, you had no understanding of before starting, I guess. So
Yes.
you, in a sense, you were lucky of finding like a really interesting perspective, right? Or
Yes, very much so. I was really just when I started, I told myself I give it a shot, maybe for 1 or 2 months. I see what's actually happening around me, what people do, what kind of cultural practices do they engage in, what do they do on an everyday basis. And pretty soon, when I started to talk to the first analysts, they, like I asked one of the analysts, like how to get me through the practice of actually coming up with the forecast. And that guy started to talk about feeling, and you have to get a feeling for the market, a kind of, and I was totally struck by that, because up to that date, I've felt like these are people that always, this is only about calculation. And then I ended up in this setting where people would refer to feeling and, like things
Yeah.
that really, so I thought, like, this is it, like this is the thing I have to write about, what actually happens in the process of producing forecasts.
Right. Can you perhaps describe the setting you were in? So was it one large room of the bank where all the analysts were, or different
Mhm.
different levels in the bank, or how did it look like?
Mhm. Yeah, well, I mean, for the geeks out there, I have to tell, these were buy-side analysts. So it's not, if you are familiar with some of the, like the former work of Yuval Milo, for example, talking about sell-side analysts. These are buy-side analysts. So they work for the clients of the bank they are hired by. And the setting was really, it was an open plan office with around probably more than 100 analysts in one big
Okay.
room. Some of them, or most of them, would identify as fundamental analysts. Some of them would identify as technical analysts. So there were different approaches to kind of study the market and estimating the future of the market. And it was in Zurich, so it was with one of the big Swiss banks in Zurich.
Right. Okay. And how so you walked through the doors of this bank, and then you got put into a team of analysts. Or were you able to sort of go around and talk with all of them, or did you follow one person over the time, or how did that
Mm.
work?
I was embedded in a team that did thematic research, so-called thematic research, because as part of my research, I wasn't just the researcher sitting there and kind of from a distance observing them. I was also proactively engaging in the work. So while I was doing my participant observation, this is what we call it in social anthropology, um, while I was doing participant observation, I was also taking part in this process, everyday work processes. And so I was kind of embedded in the thematic research team, but also able to communicate with whomever I wanted in the bank, in the financial analyst department.
Right. What is thematic research?
Thematic research is actually means that it's a bunch of financial analysts that study markets not exclusively by looking at a specific industry or a branch or a sector, but try to approach market from a thematic perspective. So, for example, political analysis or socially responsible investing, things like that.
Oh, right. Okay. Okay. So, what was the most surprising thing you found out when you
I
first
mean,
entered? So, maybe not the conclusions of the book, but like the first, when you got in there.
I mean, there are many interesting things if you enter a bank. Like one thing that, for example, struck me is how I don't want to say miserable, but it's kind of, yeah, maybe miserable is how miserable the work conditions are with these banks. If you
Mm.
see banks from outside, you think like these are these fancy places. They also look fancy. The people wear expensive suits and so on. But once you enter the bank, you can really feel get a sense for the shareholder value, in the sense that rather than invest in new computers, for example, unless it's necessarily needed for the work, rather than investing in computer infrastructure or nice, like nice things in the office, nice to create nice spaces, they would rather, like use it for either shareholders or to increase bonuses, but
Mm.
certainly not to create comfortable workspaces. So
Right.
these are very well paid people, actually sitting in or working in rather poor conditions, so to say.
Mm. Were you able to see a distinction between the financial analysts and the other departments of the bank?
Yes, very much so. I mean, I was, of course, also in touch with the traders of the bank, then also from outside sell side analysts or legal and compliance department. And I was really struck by how much they differ from each other. The way you look at markets. I mean, if you look at things like, for example, volatility in the market, to traders, volatility is a great thing. They can make money independent from whether prices are going up or going down. To client advisors, volatility is rather a bad thing, because they have to explain that to their client on the when they make losses they didn't expect. For analysts, it's kind of, they position themselves as if they were outside the market, kind of
Mm.
not really being part of that whole setting. So it very much differs in depending on whom you actually observe among these groups. And they also the way, and then the anthropologist comes in and also says the way they dress, the way they speak,
Mm.
they perform their role in very, very different ways.
Yeah, exactly. I had this quote. They distinguish themselves by using cultural codes, a particular language, a style of dress, and a body of acquired knowledge.
Exactly. I mean, this is what I'm trying to show in the first part of the book, like, and this is very anthropological in the sense, or ethnographic in the sense, to just show, like what kind of field that actually is.
So, as an anthropologist, what do you look for in, let's say, the things you would want to find compared to a economic researcher or an economist?
Yeah, I mean, I have to say I'm inspired by anthropology, or I'm a full-hearted anthropologist, but I also was very much influenced by the social studies of finance that time, or still am. People, you had some of them on the show that did terrific work, also stressing a bit how do devices come in, how is knowledge produced, can we
Mm.
talk about epistemic communities and so on, how to observe markets? So I was kind of interested in all these things. So on one hand, I looked at cultural practices, but this does not mean to exclude the economic practices. It's rather a way to look at economic practices, but through a different lens, so to say. So yeah, I mean, and this became my basic questions to say, how can I look and describe what they do, these financial analysts, on an everyday level, without reproducing kind of what you would hear in finance studies, or among economists, in what their role is.
Right. And that, I mean, one of the paradox which you mention is obviously that neoclassical finance or economics, they are based on those theories and assumptions. Financial analysts should not exist, and
Yes.
and then they still exist, and they are very much part of that whole scene, the finance scene, right? The finance industry. They are a well known actor, right? And so, and you said um, you were put in the financial analyst department without sort of selecting it, but had you already read up on all these theories to give you this sort of background understanding, or did it sort of develop over time?
No, it's really developed over time. So one of the first things I did when I was entering the field was really like to learn about their practice empirically, being a member of that particular field. And at the same time, I was starting to read the literature from yeah, I mean, I knew a bit about neoclassical economics, so that's what was an interest before. So I did my reading, but in terms of analysts, I didn't know too much. So I was really in parallel reading some of the work on financial analysis, on market forecasting, in practice, and then it really turned out to be that weird situation that on the one hand I was very inspired or very I did that reading and I wanted to talk to people in the financial analyst department about that, and at the very same time these financial analysts told me if you want to become a good financial analyst you have to forget everything theoretically, everything that you learned from university. So they didn't only tell that to me as a social anthropologist, they also told that to their colleagues coming from finance or management studies or
Right.
economics.
Yeah. And I guess to new recruits as well.
Exactly, exactly.
Mm. So could you, if you were to generalize across the analysts that you met over the years in the study, could you define like a typical analyst? What age? How do they look? Can you give a bit? Is there a typical analyst?
Yeah, I would say there kind of is a typical analyst, and the typical analyst is certainly male. There were few females in the field, but I mean it's maybe 5 to 10 among 100 or something like that. So
Mm.
very few females. So the typical analyst would be male, rather young, like not too young, not as young as most of the traders. I would say like maybe 35 years of age, around that.
Mm.
Um, and then in my particular setting, it would be a kind of usually a person with a middle class background. The ones, I mean, this is very generalizing, but I would
Yeah, of
say the
course,
ones
of course.
with the upper class background, they become client advisors
Mm.
using their
They can
networks and
talk that specific language, perhaps. They understand the
exactly,
clients. Yeah.
exactly. So I would say they would really rather be in relationship management of client advising, and then some of the working class people. That's very interesting. You find them among traders.
Mm.
So in trading, you not exclusively, but you have a significant part coming with a working class background because I mean this is so interesting. Caitlin Zaloom, who is kind of my hero in the anthropology of finance. She writes about that, how Wall Street and London, they started to recruit specifically working class person because they felt that for trading because they felt that they had the kind of the hunger and the
Mm.
like the guts that it takes to become a trader. And in financial analysis is pretty much I would say like a with a middle class background, so to say.
Wow. Okay. Could you share some tell us a bit about what happens sort of behind the scenes. So obviously, correct me if I'm wrong here, but the main product that a financial analyst produces is the forecasts.
Hmm.
So how does a forecast come about?
Yes, I mean, and that's what they're trying to point at to in the book in detail is really like if we see that final forecast, it's usually communicated as a small text with an opinion of the financial analysts,
Mm.
and then completed with some charts, of course, some numbers, so it looks as if it's an outcome of basically mainly calculations and
Mm.
estimations. However, if you look at the process, it's it's quite messy, and I try to describe that in my research, how they sit together, they exchange opinions. And what's really interesting is that each analyst that I worked with has his or her own way to kind of approach market, and they're always looking for methods and for strategies to kind of outsmart the market in their very own way. And sometimes they share that, some keep their strategies secrets, but this is really like, this derives from the fact that they of course know how difficult it is to outperform the market. And I mean, they know about market efficiency hypothesis. They know about the whole empirical, testings of monkeys throwing darts and so on. They know about these things. They are not stupid, of course. But in the context that in that knowledge how difficult it is to outperform the market, they kind of always look for strategies that could help them. And these strategies are, they vary widely. So they go from, I met analysts working with astrology. I met analysts that worked with only or technical analysis, only going
Right.
for the visual, the visual the visual this
Yeah, the
description of the market.
patterns, right? Yeah.
Yeah, they look for the patterns. So this is really different. So they're always seeking for that one strategy. I had one analyst that worked with Fibonacci numbers all the time. So he was totally convinced that market developments, you can by looking at Fibonacci numbers, you can learn something about the development of markets. So that was really crazy. And what I try to argue in the book is really that it all is directed towards the very essence of their work, is to produce a coherent investment narrative. So it's really like what I try to do with the book is really to stress that role of narratives, actually, to produce meaningful and also entertaining at times narratives that describe an uncertain future.
Yeah. Can I ask you about, so in this department of 100 analysts, were there like top 10 who everybody wanted to pick their brains, or did anyone stand out?
Yes, there were some very prominent figures there where that they kind of stood out. But the interesting thing is, if you, and I like during my research, I started to do these things, like if you track their performance, it was not necessarily the case that the most influential analysts were the ones with the best performance. Rather, they were very like skilled in bringing across their particular narratives, also always creating surprising narratives that caught people, that other people, also clients and traders, thought they would be worth to take up and tell them to other people. So it was quite crazy, because it's really like also their bonus structure was not linked to the performance they had. So nobody really tracked their historical accuracy of their forecasts. But what they tracked is how many people, how many clients, how many counterparties would want to talk to them, to hear about the stories they came up with.
I mean, that is incredibly interesting, that it's not about prediction accuracy, but it's about the creation of the investment narrative and being able to sell stories. And in a setting where they are definitely able to measure everything, they can easily have someone, a board in the room where you can see, I made these predictions, this is the outcome, percentage above, below, whatever. Like you can easily follow this. And when you say that is not even connected to their bonus, it says a lot about they themselves, I'm referring to they as in the bank and the managers who decides how the performance structure should look like, that they know about this. They know it's not, that's not that's not the product, right? It's not about the
Mm-hmm.
predictions. You could sort of infer it based on that. It has to be something else. So
Mm-hmm.
what is going on here? Why are stories so important?
Mm-hmm. Yeah, I mean, you're absolutely right. I mean, it wasn't, and that was also surprising to me. It wasn't, like talking to these people about the difficulties in outperforming the market. It wasn't a big reveal to them. They knew
Mm.
that, and representative of the banks, of course, they knew that. So as I argue in the book, is really like that this is meaningful in the sense that if we are as market are organized in a broader capitalist regime as it is, or financialized capitalist regime, they need these future narratives, not because markets are predictable, but exactly because markets are not predictable.
Mm.
Somebody has to give us or investors in general some points of orientation to become active in the presence. So that's really like that will be the cultural meaning of the existence of financial analysts. Furthermore, if we talk about the perspective for the bank is it's really they hire analysts because of course, like the worst thing, I mean, as I mentioned, it's buy side analysts. They are there to animate the clients to invest and continue to be invested, and ideally not be invested in one particular stock for 10 years,
Mm.
but continuously do to so-called roll their portfolio to be invested here, and the next month change their strategy to another equities or bonds or whatever they feel like it should be best, because this creates money for the bank. So the bank is interested to have analysts that produce narratives, and in the best case, always changing narratives, always a
Mm.
bit adapt their narratives to have investors to change their strategies every now and then.
So they do this to increase trades, right?
Yes, exactly.
Mm. But I guess I don't know if this analogy works here, but if we have misinterpreted the banks and the advice they put out there as that they are out there looking for gold, but maybe it's they are suppliers of the access for us who are out there looking for gold, and no one really knows where the gold is. But as long as people buy pickaxes, right, and try to dig somewhere, they make
Mhm.
money. So it's about coming up with new places. Go here, dig here, etc. I guess
Mhm.
it works on some levels.
Absolutely, and nobody even know whether there is actual gold out there, like,
Yeah,
so whether that
right.
gold actually exists. And of course, like to some degree, the bank has an interest that the investors and its traders and so on, they benefit from the market. I mean, that's a given. I don't want to say that's not true, but it's only a part of the story, and
Mm.
like, and I think especially by looking at financial analysts, we can see a lot of things who are or processes that are much more complex than just a narrow financial kind of reasoning, that they are just basically collecting information.
Yeah, of course. And you're right. I think it's important to say that it's not about viewing analysts as, below average in intelligence, that think they can predict the market and they don't really, see the evidence against it. Of course, as you say, they know this. And it's
Hmm.
also not about saying that all the investors who follow their advice are idiots and stupid. Of course not. So there's something
Absolutely not.
else
And
going on here,
yeah.
right?
Yeah, and I have to be, I mean, I want to be very clear about that. Like I met some of the most brilliant thinkers um, there, like I was really like continuously also surprised by by some of the knowledge that people there had. It was a very interesting time to spend there. I never
Mm.
felt as informed on what's going on, not only in the markets, but also politically and socially, as during that time as a financial analyst. So the problem is just that their intelligence and their excellency doesn't help them to outperform the market.
Yeah, no, exactly. So if it's not about this prediction ability, uh, could it be to give investors, and I think you either you mentioned this explicit in the book or you allude to it, but giving investors agency as well. The idea that
Yes.
they can make their own decisions and they are in control of the future.
Yes, absolutely. Absolutely. It is about agency, because agency has to be constructed somehow, because
Mm.
otherwise, I mean, why, if you have money, you want to invest it in markets, first somebody needs to create a sense of feeling that it makes sense not to do it just like randomly,
Mm.
just, or I mean, you do have that development with ETFs at the moment. For example, some people think it's better to just invest in the market in a broad range,
Mm.
which I totally see. But with financial analysts, it's kind of it's also a service mentality to have somebody um, at the bank to talk to where it's also surprising these the reports that analysts produce. They are usually not, they are not, I mean, they are published by the bank, but not only under the name of the bank, always also under the name of the analyst, of an
Mm.
individual. And this is exactly to create some kind of proximity. Like, there is somebody who knows what I do is not simply speculation, it's investing based on information, on knowledge, and there is an expert in the bank that helps me through this process. And this, of course, gives me, constructs a form of agency for me as an investor.
Yeah, exactly. And it could be, I guess one other point would be, if it's not about the prediction, it could be that obviously these analysts who follow a specific theme or an industry or different companies, and you have investors that are just, I want to talk with someone who's very knowledgeable about this specific thing. Who can I
Mhm.
turn to? So, so there's a different value of what they, the knowledge they possess as well, I guess.
Mhm, mhm, mhm,
Um, but so let's say if we want to follow the production of this forecast, so now we have created the forecast. Where does it go? Inside the bank, outside the bank, and what are the
mhm,
other actors that you, at least
mhm.
that you were able to follow?
Yeah, I mean, that's another kind of function, I would say, that these investment narratives have, is that in the bank I did research with, that the financial analysts, they actually rather rarely talk to the to the investors directly. Their
Mm.
forecasts go to client advisors, who then communicate it on to individual clients, or they go to the asset management of the bank, and the asset management then uses it for asset allocation. And that's also something that I found very interesting, because what that system created is, if something goes wrong, and it usually goes wrong quite
Mm.
frequently in market, because of the lack of being able to predict market accurately. So if something goes wrong, the the client advisor or the asset manager, they also have the opportunity to kind of blame it back to the analysts.
All
And
right.
that's what they usually do. The asset managers, I've been in contact with them, my research, and the client advisors, they usually talked in rather bad ways about the analysts, saying, ah,
Oh,
they're
okay.
always wrong, they don't get a thing, they always mess it up. Still, they love to use the predictions or the forecasts by the analysts, exactly because it kind of it creates an opportunity for them to externalize responsibility if something goes wrong. Bad, they can say that was the financial analyst's idea.
Right. And I guess uh, the same thing goes for the bank, since the analysts have to put their own name on the analyst report or the investment recommendation. So the bank can always say, well, this analyst, it was the analyst who did this. So there's so many levels where you just push away accountability, right?
Absolutely, absolutely. I think if you look at banks as institution, many things are about accountability in the sense to make sure if something goes wrong, in case of failure, how do we take that, make sure that it is not something we are being held responsible.
Yeah, exactly. So so I shared with a colleague of mine that I was going to speak with you, and he shared two reflections. He also read your book. So the first one is that other academics attribute this idea of narrative authority to you by referencing your book, which I've come across myself as well. Yet you never mention it explicitly in your book. Do you see yourself as the father of that concept, which is definitely being used out there today?
Yes, I'm very. I mean, the thing the thing with the concept of narrative authority actually goes back not to the book but to a paper that I published afterwards
Right.
in an anthropological journal called Ethnos. And it was really I was happy with the book in general, but I thought like I could conceptually I should have taken that a bit further. So I created I started to talk about narrative authority, and I mentioned that in a paper which was published 2 years after, I think, in a journal called Ethnos. And in that paper, I talked about narrative authority more precisely. And the thing is, it was actually quite a beautiful story, or beautiful to me, because as a scholar, if you talk about something and you try to frame a concept, you never know whether somebody out there, takes it up or hears it or is interested about that. But the thing with narrative authority is really that, I mean, two scholars there, two professors from HEC that you had on the show as well, Luc and
Right.
Hervé, Luc Pogam and Erwin
Stolovi, yeah.
Stolovi.
Yeah.
Stolovi, it's the last name. I mean, they took it up in one of their very well-known papers. So it kind of, the concept got a life on its own in accounting. So, I mean, this is, to me, that was a jackpot in the sense that to see an idea living on and other people working on this. So that's fantastic. But it's you're right. It's not in the book. It's in a follow-up article, which is kind of works with the same material, but it's not in the book itself.
Yeah. And when you know the concept, it's very clear in your book as well. You sort of see it everywhere, right? But
Yes, yes.
For those of us who are not that familiar with narrative authority, can you maybe explain what is narrative authority?
Yes, narrative authority is really like that effort that the analysts try to position themselves in the market, namely to create a authority, to a position of power through their narratives. And a lot of their practices are really all about creating the authority in the lack of having a definite or a standard protocol to establish their forecasts. They try to make it in a way that they can claim that they understand the market. So they try to create that authority. And then also, like after the forecast is produced, also the way they talk about their forecasts, they defend it against other perspectives, other narratives of the market, is very much in a kind of a economy of attention and authority, that they want to become famous with their narratives and create a position of power in the market. That is what is narrative authority is about.
Right. why did you choose narrative, the word specifically narrative, and not story? What's the difference here?
Yeah, it's, I mean, the book is called Stories of Capitalism. So the story is actually in the book. But I mean, the difference is really like it's, I mean, if I would have called it stories, it's like a story has it has a clear beginning and a clear end and a
Mm.
clear dramaturgic
Yeah,
a flow.
exactly.
A narrative is not exactly that. It can be a narrative can be a story, but it doesn't have to be it doesn't have to be a story. So the
Mm.
narratives that financial analysts use are not always fully thought through stories, but they are maybe also takes, positionings in the
Mm.
market, different perspectives that they develop. So yeah, a narrative can be a story, but it doesn't have to be a story.
So if I just take an example that I'm sure everybody can relate to, the whole AI revolution or AI bubble or whatever you want to call it, would that be? Could you say that that's a specific narrative, or is that too broad to fall into this category of narratives the way you define it?
No, I think it could be a narrative. I mean, I make the distinction in the book also where I talk about not grand narratives, but larger
Ex-
narratives and then
mm.
smaller. So you can still differentiate there, but I would say this is a narrative. And
Mm.
it's actually it's a good explanation, a good example of a narrative because I mean, as you mentioned it now, it's not a full story that you're telling me, but it kinds of I get the sense where you're trying to take that towards.
Oh, right. Yeah. Yeah. What would you say makes a narrative powerful enough?
Um, and yeah, I mean, that's it's great question. I would say what makes a narrative powerful is the willingness of others
Mm.
to to accept it
Right.
and to yeah. So I mean, this is and you can see it among the really like the famous or the successful financial analysts. They do that all the time. They try to also to come up with narratives who may not even be that likely, but they are provocative. And if they are successful, everybody will link the narrative to the name. Say, oh, this is the guy that predicted this or that, and this is the lady that saw the financial crisis coming, and all these things retrospectively. So I think the power of narratives is really in the lies in the ability of other people taking it up and reproducing them.
Yeah. Uh, Another question I would like to ask you is this: how do financial analysts look at the time horizon? Because so you were during two years you were at this bank, but and 2 years in the business world is not very long, but in the financial world, it's a very could be a very long time, and which is kind of interesting. So did you see different kinds of narratives from, let's say, one financial analyst, even though you were just there for 2 years? 2 years is a long
Mhm.
time for an ethnography,
Mhm.
but maybe not. You see my point, perhaps.
Yeah. No, um, I mean, they work with different time horizons. So usually in the bank where I was, but I also saw that with other banks, like they have, like they do 3 months
Mm.
forecasts and then a 1 year forecast and 3 year forecast, something like that. So these are different time horizons where you can also say, I mean, financially from a financial market perspective, these are all quite uh,
Right.
long horizons. If you think about program trading and high frequency trading, I mean, we're not talking about nanoseconds here, so we really talk about longer time horizons. Um, that's yeah. So and and of course, like during the 2 years I was there, you could also see the dynamics behind that. I mean, these longer term narratives, they totally changed while I was there. In the
Mm.
beginning, they were on totally different things, which is kind of okay. So I don't want to blame the analysts because things develop. I mean, we're seeing it right now. Like if you go way back 1 or 2 years right now, uh, no matter how intelligent you are, you couldn't predict many of the things that are happening now. So they always change, but in theory, they try to at least to have a longer perspective on the market. Again, not because the role is to outperform the market, but the role is to give that kind of sense of agency to the investors,
Right.
to provide them with a perspective.
Mm. So first you create a story or a narrative, investment narrative to get people to trade, and then a couple of months later you change it, you come up with something new. You
Exactly.
yeah, that's really so you create
Exactly.
trade from the start, obviously, and then many times over and over again.
Exactly.
So the other reflection my colleague shared was that your book also focused heavily on the relationship or interaction between analysts and client advisors or asset managers, but not so much on the companies that they are actually valuing. Did you see did you see any reason for that? Could we interpret this as the analysts do not think meeting with the companies are that valuable?
Yes, I mean, this is partly just very pragmatically that was a buy-side financial analysts
Right.
department meeting. They were in touch with the companies, but not as much or as frequently as you would see it, for example, with sell-side analysts. So that was one thing. So there was interaction with the company, but it wasn't as frequent. So it was for me harder to observe. That's
Mm.
the one thing. The other thing is just also very pragmatically that there has already been quite good research out there on the interaction between analysts and companies, namely Yuval's work, also Daniel. Forgot his last name, but you had people that worked on that relationship. So I acknowledged this literature, but I had the feeling like this is not something I could add
Right.
terribly well to it.
Mm. I think it's Daniel Beunza
Beunza, yeah,
and
Beunza
Garud
auch, true, yeah,
2007, which I know you reference in your
exactly, yeah.
Mm.
I mean, this was also, I mean, so many people influenced that work, and also when you start to write, I had this point various time where you think like, okay, what can I actually say that nobody else has said before? Because there has been brilliant research being published before. And I think like my strategy or my way was really to to um, to understand this as an ethnographic setting, and then also have a focus on narratives, and
Mm.
then also make it also valuable to the community of anthropologists working on finance, because they're also like anthropologists have always been kind of part of the social of studies of finance community, but also in a kind of a distinct way of seeing the field.
Yeah, and you do, and I believe it is quite early in your book. You talk about performativity, which is heavily used in the social studies of finance, and you reference Michel Calon, and obviously he's
Mm-hmm.
I guess he's the I think he's the founder of that concept. I'm not too familiar, but what is then different with seeing sort of the uptick of investment narratives creating this sort of loop that confirms the narrative from the start? Isn't that a kind of performativity as well?
Yeah, it's a very, very good question. Like just on the origins of performativity. Yeah, I think most would like credit Michel Calon for the initial like concepts, and then Donald Mackenzie, of course, took it
Mm.
up or kind of created something different, something similar quite early on. But then it would really say like it's basically some of their scholars, namely Yuval Milo and Fabian Munyeza, who really like then took it to the next level and really worked
Yeah.
on that continuously and made sure this became an important concept. So I really like their work a lot in the way they engage with performative effects. You could, of course, like talk about the narratives as in the context of performativity, but like when you look at the work done on performativity is actually meant as a kind of studying the interaction between economic theory or academic theory and then people in practice, or Michel Calon calls it economists in the wild,
Right.
the people that I study. So that it was always about the basic assumption of the performativity theory is always that something is developed, a theory is developed in the academic field, and it has an impact. It performs, it
Right.
frames, it influences the practice out there. And I had a different experience that the people in the wild, the people I worked with, that they didn't care so much what's going on in the academic in the academic realm. They would refer to concepts in the academic realm if they felt like that it is supportive to the narrative they are constructing, but not in a systematic way. So this is why I talk about performativity in the beginning of the book, but then also take the decision to not frame what I observed as something just in that concept or being part of the concept of performativity.
Interesting. Thank you for explaining that. I didn't really fully get that when I read your book. Not saying you left anything out. It didn't come to my
No, but
mind.
it's really like
That's
it wasn't also so clear for me. Like in the writing, it was kind of open how much I would subscribe to the performativity theory. But then also, I mean, it's not it's not a coincidence that many of the performativity studies, they study quantitative finance, algo trading, and
a lot of
application of
derivatives and
Black-Scholes formula and
yeah,
so on. I mean, this is different. I would consider my field to be kind of qualitative in the way that
yeah,
these people, they at least don't exclusively calculate. I mean, this is the point I'm trying to make.
yeah. Okay, so looking back at your work now and this book that you have produced, and you mentioned at least an article that's been published based on this, what would be the takeaways for let's say the financial analysts? Could you see them using this research somehow?
Very good question. Yeah, I think so. And I am in contact with, not systematically, but every now and then I get to meet people that I got to know through my research, or if I'm presenting on it or writing on it, or I'm doing a podcast, every now and then somebody contacts me. And I think it's really like what I think it's fascinating is that there is kind of an awareness that story making or production of narratives is important, but it's not actively reflected upon within the industry. So I really do think that taking that really seriously uh, could be something financial analysts could benefit from. But of course, I also see they have to be careful. They cannot promote themselves as storytellers,
Yeah.
because then it creates a kind of an issue with their justification. So it's tricky.
And what do you think could be the takeaway for, let's say, us as normal people wanting to learn more about the markets and investing our own funds?
Yeah, maybe just the awareness that these things are much less stable as you tend to think of it from the outside. And these knowledge forms, the knowledge that is constructed in financial market is is interesting, but it's not a stable body of knowledge. It's not a fully theory-based body of knowledge. It's kind of it feeds from different knowledge regimes, and we have to take that into account if we become active in financial markets, and also the question what forms of power we assert to financial markets. Do we want to be governed by these forms of knowledges? Yes, or
Even though
not.
we know that the future is unknowable even to the smart financial analysts at the big banks.
Exactly.
Perfect. Can I just finish with one question, which is, what are you exploring right now? Where do you think sort of the untapped avenues in your way of looking at the financial market is right now?
Yes, I mean, I'm still interested in financial markets. However, now in my current project, I'm rather working on commodity trading, so OTC market, over the counter trading, and I'm interested in the links between over the counter market and exchange places in terms of commodities, namely mainly metals. So it's about financial markets, or it's about the financial market infrastructure, so more broadly speaking.
Right. Okay. Okay. So Stefan, I see our time is up. Can I ask you one more question? Do you have time from that?
Of course, of course.
Perfect. I always like to finish with getting some extra value for myself out of this. So, as a newly started PhD student, do you have any advice for me?
Great question. I think just like, don't be scared. Just go for whatever you feel is worth being explored. Don't listen too much to your supervisors. Because in terms, I had great supervisors, but just in terms of, you know best what could be something that nobody has explored yet. So just also maybe do it a bit like the financial analysts and follow your instincts and your intuition.
The gut feeling there.
The gut feeling, exactly.
Well, perfect, Stefan. Thank you again for taking the time. This was a great conversation. Time really just flew by.
Thank you so much. Yeah, it was a pleasure to be on the show. Everything, all the best also for your future, for the show, and for the future research. And then next time we'll talk about your book, hopefully.
Yeah, I definitely hope so. Give me a couple of years. I need that.
I will.
Thank you, Stefan. Look forward to speaking with you and staying in contact. Until then, take care.
Bye-bye.
Bye.